Good morning, guys. Hello and welcome to Moneycontrol's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. It's the final day of the trading session, and today is Friday the 13th. So we are starting with a barrage of negative news flow. But yes, first, our hearts do go out to all the families which is affected by the Ahmedabad air tragedy, one of the worst that India has witnessed in recent years as well. The Ahmedabad Air India flight was bound to London and it crashed within 33 seconds of the takeoff yesterday, and it claimed about 241 lives, and that's what the Air India has confirmed, and just one sole survivor. He's being treated in the medical facilities at this point of time. Notably, Gujarat ex-CM Vijay Rupani was also part of the list. So yes, all the strength do go out to all the families which is affected by the tragedy. But yes, the negative news flow doesn't end here. Globally, the markets are on a risk-off mode given Israel's attacks on Iran's nuclear program. We were expecting the Middle East tensions to flare up yesterday, and in the early hours of this morning, we did get this alert. So if you look at the oil prices that have reacted to this, 9 to 9.5% jump, about 11% jump also following the attack, and both the Brent crude prices are at a 2-month high. So not just oil, but the rotation has clearly shifted to the safe haven assets from equities. If you look at the US markets overnight, that did well, but that picture changed dramatically this morning with Dow futures down about 600 points and NASDAQ also down by nearly 2%. Even the Asia Pacific markets have fell sharply. Japanese index down by 1%. South Korea KOSPI also trading with a percent cut also. Coming back to our own markets, a gap down start is expected after yesterday's sell-off. We'll also watch out for some of the crude sensitive stocks in today's trading sessions. All of the upstream and downstream oil companies, paints, tires, all of them will be in focus. We'll also be taking your stock related queries, so keep posting them on our live feed and we'll take them up shortly with our expert of the show. For now, let's quickly take a look at the top headlines, Sir. US futures fall sharply amid escalating tensions in the West Asia. Stocks in the Asia Pacific also trade largely lower on the back of this news flow. The GIFT Nifty meanwhile is indicating a lower start for Indian markets. Tensions in the West Asia worsened after Israel conducts military strikes on Iran. Israel's defense minister has declared a special state of emergency in this country. The US Secretary of State says that US was not involved in the attacks. Crude oil prices jump 8% after Israel launches airstrikes against Iran. Brent crude trades around $75 a barrel, while gold prices also rise amid rising geopolitical risks. And the latest around the tragic Air India plane crash. Rescue operations have been completed at the site of the crash. Air India has confirmed 241 fatalities with one sole survivor. Several bodies were also recovered from the medical college the Dreamliner crashed into, and the total death toll from there is not known yet. Inflation slows to 2.8% in May, the lowest seen in 6 years. Food prices accelerate less than 1%, with prices of food and cereal also cooling off. Right, we did see the Air India tragedy yesterday, and of course we're starting off with a negative news flow of Israel attacking Iran's nuclear program in today's trading session also. But how did markets react to yesterday was like the Nifty and Sensex, both the benchmark indices saw a sharp sell-off, and both of them were down by 1% each. The reasons were threefold. Of course, the Middle East tensions, which were keeping the markets on the edge, the weekly expiry, and of course the plane crash which happened yesterday. There was lack of support from the banking index in the last trading session also, and the Nifty ended below that 25,000 mark, a level which was seen after June 5 as well. Now, it was also the steepest decline that the Nifty saw yesterday since May 20, and Nifty is now once again back around that 20 DMA, which lies around 24,800 mark. If you look at the broader end of the markets, profit booking continued there. Mid-cap and small-cap indices continue to bleed over 1% each, and all of the sectoral indices did end in the red, with about India VIX, which is your volatility gauge, jumping to about 2% or so. But yes, one positive news that did come out yesterday was your retail inflation print, which slipped to about 6-year low of about 2.8%, way below RBI's tolerance band as well. So that's a positive news flow that is coming in from the inflation print and the macro developments on India. Coming to the fund flows data, FIIs, they continue to be the net sellers in the cash markets. They sold about 31 crore rupees in the cash markets in yesterday's trading session. And DIIs, however, they were the net buyers because they bought stocks which was about 9,300 crore rupees in the cash markets. Now, both the FII DII flows will be important in today's trading session because we are expecting a gap down start for our own markets. If you look at the put call ratio also, that has fallen to about 0.92 from 0.97 levels in the previous session. So there is some, risk off sentiment which is building up in the markets too. Coming to the F&O ban list, one new stock that has been added to the F&O ban, that is your Birla stock, and the stock that continue to be retained, and a part of the list that includes your Aditya Birla and Fashion, Chambal Fertilizers, Hindustan Copper, Titagarh Rail, RBL Bank, Irida, CDSL and IEX. So yes, a whole host of stocks which is part of the F&O ban at this point of time. But yes, just a couple of minutes before we go to the open, if you look at how the markets have been reacting in the pre-open rates, a very sharp sell-off. Sensex down about 1200 points and Nifty also below your 24,500 mark. So yes, Nifty also down about 400 points, so a very gap down start we are expecting for the markets today also. But on that note, let's quickly get on board with a technical expert of the show. Joining me is Raja Venkatraman, co-founder of NeoTrader. Raja, how do you view the markets right now? Nifty is showing about 24,500 below that mark. What is next? What is the next sentiment that we'll watch out for?
Yeah, so when you look at the markets right now, the markets are clearly not aligned with what's happening. And yes, on the 15th of May, we had created a high of around 25,000 to 30, but it did try for the last 4 days. And now what has happened is that a lot of headwinds out there. Supported by a lot of negative news flows, the bears are having a firmer grip now on the market. Now, when you look at the market sentiment, yes, these are external news flows that are coming into play. And these external news flows are what is going to dictate the sentiment. Yes, the mid and small cap did work. Yes, the large caps also participated. Bank Nifty moved above 56,000. But then ultimately, the geopolitical tensions are having their way over the trends over the last entire almost the entire year. So now, with that being the par for the course, one should start having a higher emphasis on what the geopolitical scenario is while taking positions. Because yes, the charts may definitely indicate certain trends, but then if the geopolitical news flows are not in alignment with our position, then I'm seeing that we are always ending on the wrong side of the trend. So right now, all of us are standing on the wrong side of the trend at the moment. We are going to have a gap down, but then I feel that around the 24,400, 500, there is going to be an excess in the morning. So I would wait for the first 15 minutes to see what kind of reactions are coming in, whether people are really participating in this reaction or this negative news flow is going to be priced in. And then I will take my call further on. But then at the moment, I would like to stay on the sidelines because at the current way the market is unfolding, it definitely is very clear that there is going to be some lack of uncertainty that's going to happen definitely today, and it may overflow into the next week as well. So it's going to be a dicey situation for now. So I would wait for at least the first 15 minutes to find out what needs to be done.
Okay, all right. That is what we are waiting for also. But the Bank Nifty index, yesterday also we saw a lack of support from the financials as well, way below, way ahead of the tragedy yesterday. But Bank Nifty index with about, 3 days of consecutive sell-off that we have seen for the index. Anything that we need to watch out for, Raja?
Yeah, so when you take a look at Bank Nifty, all of us were expecting a rate cut, but then when the rate cut was announced, it was pleasantly surprising with a 50 pips rate cut and a 100 pips CRR cut. So yes, the overwhelming factor did take the Bank Nifty up, but then what has happened is that after the gap up movement, the prices have actually come down. So there are many people who are stuck now in the bank nifty position, and I feel that the momentum which we expected that the RBI policy will trigger has really not matured. So all of us are now left with positions which we entered on anticipation, but then the fact of the matter is that what is unfolding is not matching the expectations. So I would say that there could be some more selling pressure on the banking, financial, real estate today, especially.
Okay, banking and financials could see pressure. What about the mid cap and small cap indices? Once again, profit booking emerged. Do you see a pattern which is building up in the broader end of the markets, Raja?
See, ultimately, the mid and small caps were the ones who have been participating over the last 3 to 4 months. And many stalwarts are saying that the retail is not what they used to be, and they are not afraid of the decline anymore. And actually, at lower levels, you will witness participation. So I feel that that space, some stocks which have, seen a very terrific runaway will witness some profit booking, and I believe that based on the studies, I feel that today, towards the second half of the day, we may see some kind of recovery emerging. So I will wait for the dust to settle down, because right now there is too much noise and too much chaos. And at such times, the trends are definitely not very clear.
Okay. How about the oil sensitives? Because now that the crude prices, spiked up to about 12% also. Where do you see crude sensitives going from here on? Yesterday, we did see pressure in some of the companies like I believe HPCL. All the OMC companies were under pressure yesterday. 4 to 5% cut we did see in yesterday's trading session. Do you expect this to continue in today's trade also? How much are you anticipating the sell-off to extend?
Yeah, the OMCs did show positive traction 2 days ago, but then again, the current news flow is definitely puncturing that sentiment. So the decline which will emerge would be a good opportunity for us to enter into this, because you will be entering into the OMCs at a very lower risk scenario. So any dip and then a stabilization over there would be a good point to enter into the OMCs.
Okay, okay. What about ONGC, Oil India, all of the upstream companies at this point of time? Any increase in oil prices does lead to better realizations. What do you expect on the charts? What does it indicate?
See,
Right.
these counters are still awaiting some clarity on the overall market sentiment, and they are waiting for the dust to settle down as far as the factors are concerned with regards to the war situation. So I feel that the right now, considering it is a war between Iran and Israel, I would say that it's better to wait it out and see what kind of reactions are unfolding, or if there is a pause in the war activities, and then take a cue on what needs to be done. Until then, I would be a wait and watch player as far as this sector is concerned.
Okay, okay, all right. Let's take a look at the markets where we are starting off with a sharp sell-off note that we were expecting, given that global markets are also on a risk-off mode, and we are once again down by a percent each. Very sharp sell-off with about 24,600 mark below that. That's what we are starting off right now. Yesterday we were below that. We were around that 24,800 mark, and we have slipped below that 24,700 also, 24,600 also, and we are right now trading about with 24,568, 1.2% cuts that is coming in for the Nifty, 300 points downtake for the Nifty at this point of time. If you look at the Sensex, 1,000 points downtake, 1.3% cut which is coming in for Sensex too. All of the sectoral indices are bleeding in the red. India VIX, if you look at the India VIX, that has seen a sharp jump to about 15.9, which is your 16 odd levels. 13% uptake that is coming in for the India VIX, indicating that there is some sense of market fear and anxiety in the markets, which is being priced in. If you look at the mid cap and small cap indices, mid cap and small cap, both of them trading with about 1.5% to 2% cuts, and only one gainer on the Nifty 50. That speaks volumes about what the crude prices have been indicating. 12% jump on the crude prices, and we can see one Nifty gainer, that is your ONGC, like we were discussing. ONGC seeing a gain of about 2% or so. On the other hand, if you look at the top losers on the Nifty 50, that includes the likes of L&T with about a 3% cut, Shriram Finance not doing well with about 2% cut, SBI Life, Tata Motors, Bajaj Finserv, NTPC, Geo Financial, all of them in the red and in the top losers on the Nifty 50. If you look at the Bank Nifty index, Bank Nifty is also not doing well with about 1.1% cut at this coming point. And Nifty, IT index, metal indices, all of them, it's red across the board at this point of time. But yes, ONGC, like we were discussing, it's not doing well. It's doing well with about 1.7% gains at this point of time. But yes, Raja, what about, the defense railways theme? How do they look right now? Because earlier they were the ones which led the market rally, and of course they were buzzing in the trade. But how are you seeing them at this point of time? Are you still bullish on some of these themes?
Yeah, as far as between defense and railways, yes, defense is a better bet considering the defense has established itself as a sector which India has developed over the last few years in this current government's tenure. So, HAL, BEL, the news flows are, increased quite a bit now. So, these kind of news flows are going to come in. But eventually, we got to see whether the move which we have seen, for example, in HAL over the last 3 months, it has moved almost by 40 to 50%, right? It's moved beyond 50%. So now when such kind of moves occurs in such a short time, so one can't keep expecting that this upward trajectory will continue. So in such scenarios, it's better to buy on some reaction. Now, if you are on a trading side, then you can continue to participate in this because your expectation is for a shorter term. But then, if you are looking from an investing point standpoint, then I would say that you should wait for some reaction to buy in.
Dig deeper into the crude sensitive sector, both of the aviation stocks are not doing well. SpiceJet and even Indigo is seeing a cut of about 3 to 4% at this point of time. Where do you stand on both of these names, Raja? How much of an downside can we expect from here on?
So currently looking at the aviation space itself, the kind of news flow which emerged yesterday. So yes, there is going to be some negative impact that is going to come into this particular sector. But then that's going to be a knee-jerk reaction. As far as the airways are concerned, at the moment, Indigo definitely is the leader. And with new airports opening up and the airport infrastructure also getting better, I feel that Indigo is a much better bet than SpiceJet.
India is a better bet than SpiceJet. What about some of the paint companies also, because they are also not reacting well into today's news flow. Asian Paints, Berger Paints, all of them seeing a cut at this point of time. How does the structure look like on the charts for all the paint companies? Anything that you're liking from the
Yeah,
space?
so at the moment, of course, the paint companies are not something which I would like to trade in. But then when you take a look at today's scenario, so today's scenario would not be the right scenario to judge any counter, be it on the upside or on the downside, because the markets are clearly not sure about what direction to take. So, like I mentioned, I would wait for the first 15 minutes to see what kind of momentum is going to pick up. And largely now the overnight players are the ones who are actually coming into the market and closing their positions. Now, once the first 15 minutes are done, we will have some more clarity on what kind of steps to take, and then the trend will build on from there. So, at the moment, taking a judgment on any stock on the upside or on the downside would not be in the right perspective. Yes, this time frame which I am mentioning is a time frame for us to ponder on what kind of movement is emerging, whether any good stock that has run away and in the recent correction from the highs for almost 700 to 800 points is in the index is prompting us for some kind of support levels which are emerging, and that could be the stock to buy into. So like we mentioned
Okay.
about Indigo, so Indigo has dipped into some very strong set of supports, and that could be a stock which can play in the coming session.
Okay, all right. Let's take one stock in focus, because despite what the market has been doing, this stock is doing well in today's trade. That is your Torrent Power, seeing a little, it's a marginally higher in today's trade. We did see that yesterday the ARM secured about a 300 megawatt of wind power project, and they bagged it from the SECI, which was worth about 2650 crore rupees. If you look at the stock so far this year, the stock hasn't really moved right now, but today it's doing well. Raja, anything on the charts that we need to watch out for Torrent Power?
Yeah, the power sector of late has shown some good momentum to the upside, and this particular stock, however, has still waiting in the wings for developing some momentum yet. So, as a candidate for initiating some longs, yes, it's definitely not on the short side, but then for longs, I would still wait for some more momentum to emerge. So instead of a Torrent Power, I would go with an Adani Power because Adani Power is showing some strong upside, and over the last few weeks, it has been making higher lows, which is clearly a sign that the stock has been bought into on every dip. So the dip which has occurred in the last 3 days, including today, would be a good opportunity to enter.
Okay. Let's take a look at some of the Tata Group companies today, given that we did see the Air India tragedy yesterday. All of them seeing a cut of about 1% or so. Tata Motors, Tata Communications, Tata Steel, Tata Power, all of them seeing a cut of about 1.5% or so. Tata Group companies, anything that you're liking from this space, and do you believe anything that investors can buy on this decline, Raja?
So at the moment, the Tata Group company yes may face an impact, but then what I feel is that the Tata Motors has come into some good set of supports out here, and I would say that one can look to take a shot at Tata Motors because I feel that the stock is showing some intention to recover. So I'll still again my clause of the first 15 minutes remains because I'm going to wait till 9:30 for the dust to settle down. So that's a clause which I'm having today, especially because considering the series of negative news that have come in. So I would be on the sidelines observing what the market is doing rather than participating.
Okay, all right. Let's take some viewer queries that is dropping on our live feed. The first query coming in from Naveen is asking the view on BHAIL. BHAIL, how does the stock look like? I know that you mentioned about the defense theme, but anything that we need to watch out from a level perspective on BHAIL, Raja?
So, with regards to Whale, stock is definitely on some positive trajectory. And when you're talking about the power sector is showing some positivity. And you can see that today, any stock you take, they are given a dip and then it is rebounding. So again, I'll again keep on going back to my clause because everyone is itching to participate. But then at such times, it's always good to step back because over the last, you would say that 1.5 months, we have been exuding some bullish exuberance. But then the markets, however, over the last 2 3 days was unable to go beyond the May 15th low and successively establish itself. I'm talking about the Nifty. Now, with that being the case, you saw that the prices eventually came down again. So, what the market is giving us a message is that it is a buy on dip and sell on rally yet. So, let's not get too excited. Now, we have to again wait and do the work in Bank Nifty because again the Bank Nifty has slipped into a negative kind of connotation. Yes, the Bank Nifty has come into some good set of supports around 55 500 mark. So I would wait for for some time to see how the overall index build. But then yes, stock specific dips are to be bought into because stocks are definitely performing better than the indices.
That's right. That was BHAIL for you instead of BEL that I introduced before. But let's move on to another viewer query.
Yeah.
That is, your Naveen is asking on the view on Texmaco Rail. The entire railway stocks have been doing quite well, Raja. And if you look at the past 1 month, the stock has gained about 13% or so. Do you expect this bullish momentum to continue going ahead?
Yeah, definitely. The rail stocks have shown some strong surge in the last few weeks. And yes, this pullback could be a good opportunity to buy into. So, if you're looking at Tex Macro Rail, this is a good point to enter with a stop at 151 for a target towards 181.
Okay, all right.
And
Target
the time
towards
frame would be around the
181.
next 3 months. Yeah.
Okay, 181 target that we need to watch out for this company. Let's move on to another viewer query. Nitin Shaji is asking the view on Aeroflex. If you look at the stock from February onwards, after it made a top, the stock has been on a downward trajectory. It's fallen about 35% or so. What do you make of the structure right now? Do you believe the consolidation will continue, or can we see certain, pickup in the momentum going ahead, Raja?
Yeah, this stock has not shown much upside, and after its surge way back at the start of the year, the stock has necessarily spent some time in consolidation. So I would say that it will bide some more time, and I would say that a move above 185 is what will attract some bullish momentum. Until then, I will be observing the stock and not participating.
Okay, not participating in the stock then. The next query again, once again from Nitin Shahji, is asking the view on Cochin Shipyard. If you look at the entire defense and of course the shipbuilding stocks, all of them have done well, quite well in the past 1 month or so. But anything that you want to watch out for Cochin Shipyard, past 1 month, about 30% returns that has given in.
Yeah, like we spoke about the defense, there are some stalwarts in defense, and everyone talks about HEL, BEL, or Masgaon Dock. But then Cochin Shipyard has surprised the street, and the strong run which you are seeing now will definitely witness some more profit booking. So I would wait for some more time before I participate in the stock because the stock has run away quite a bit. So a dip towards 1900 would be a good point to enter.
Okay, dip towards 1900. Good point to enter for Cochin Shipyard. Let's take another viewer query. Pooja Khanna is asking the view on Adani Ports. The stock is not doing well with about 1.5% cut in today's trading session as well. But if we look at from a 3 months perspective, the stock has done well with about 27% uptick. What should we expect from a target level, Raja, for Adani Ports?
Yeah, Adani Port has performed quite well over the last 3 to almost you can say last 3 months, and I feel that the stock has got some good upward trajectory. And amongst the Adani group, I find that this stock has a lot of patronage from the retail space, and also the sector which it is in is has helped the counter stage a strong upward rise. So the correction today is a good opportunity to buy into. So this will be a good point to enter Adani Ports because your stop loss or your risk management is much closer. So a stop at 1390 can expect a target towards 1500 within the next 1 to 1.5 months.
All right, let's move on to another viewer query at this point of time. Manish Kumar is asking the view on CDSL. How does the counter look like for you? Because, lately all the capital market companies, they've been doing quite well. And if you look at from the past 1 month, the stock has given about 23% returns.
Yeah, the financials and the related stocks did perform well. The new age stocks and the stocks got listed. CDSL got listed into FNO space as well. So all that helped the prices see a strong recovery. So I find that anytime be it CDSL, be it BSE, be it MCX, any pullback in these stocks are being bought into. So now with that being the scenario and with the news flow necessarily coming from outside and not inside. So I feel that the dust should quickly settle down and we should again be on the pathway to the upside. So yes, it may take some time, but then certain stocks specific action will continue, and I find that CDSL is at a good spot to enter.
Okay, good spot to enter for CDSL right now. Let's take another viewer query then. Vijay is asking the view on Sudarshan Chemicals. If you look at from the March lows, the stock has done a tremendous stellar rally, positive momentum throughout, 50% returns also. Can we expect the rally to extend from here on, Raja, for Sudarshan Chemicals?
The run has been quite terrific. It has gone up by nearly 50%. So at this juncture, expecting the rally to continue further. If you are a fresh entrant, then this would not be a good price point. The price point would be closer towards the 1150 mark, and that's where I would be more comfortable entering with a stop loss at 1050.
Okay, 1057. All right, just one last question before we let you go, Raja. What are your top picks at this hour? We're seeing, of course, 2 days of continuous sell-off, but anything that you would, buy at this point of time?
Yeah, one of the stocks which I would like to go in for is one from the pharma space, which is Apollo Hospital. Because Apollo Hospital has been showing some good positive momentum. It started moving well yesterday also. So around you can buy it at current levels with a stop loss at 6900 for a target towards 7155. And the other stock which I would like to recommend is a stock on the short side, and that will be Indus Tower. Indus Tower has moved quite a bit, and the recent decline which I seeing right now on the charts clearly indicates that the stock is more pressure to the downside. So I would go with the long short at current level with a stop at 383 for a target towards 370 for the day.
Okay, all right. These are the stocks that we need to watch out for also. But with that, we have to let you go, Raja. Thank you so much for your time, and we hope that we connect with you soon.
Thank you.
All right, let's take a quick check of the markets before we move on to our next guest of the show. Well, it's the red across the board, and Sensex is off its day's low, but still about 900 points cut that we are seeing at this point of time. Nifty also has moved above your 24,600 mark, but still with about 250 points cut that is coming in for the Nifty 50. And majority of the sectoral indices are in the negative territory, and India VIX has cooled off from its earlier levels. We did see that in the opening. About 13 to 15% of an uptick of a jump of India VIX, but right now it's trading with about 8% bump up. If the mid cap and small cap indices are taken into consideration, both of them are seeing a cut of about 1% each. But let's quickly get on board with our next guest of the show. We have Kranthi Bathini, equity strategist at WealthMills Securities, joining us. Kranthi, good morning. We are waking up to a somber morning once again. Israel has attacked Iran and a new war risk for the markets. How are you viewing these current developments?
Lovisha, good morning to you. Yeah, the markets are again witnessing some kind of a correction because of the geopolitical escalation. Whenever the markets are going up, trying to sustain above the level of 25,300, that range, something unusual is happening on markets. Okay, it can be the domestic or it can be the external factors. Now it has come in the form of Israel attacking Iran, okay, which can be a larger geopolitical escalation, which going to have a greater impact on the entire equity market. So we are witnessing the complete correction across the globe. It can be the Asia Pacific pack, or yesterday we witnessed some kind of correction in European region. So overall, the sentiment is slightly a little bit sluggish at this point of time, and the geopolitical escalations are weighing on the markets at this point of time. The crude, which is crucial for the Indian market, which has been completely in favor of Indian markets from quite a long time, that has been creating some kind of extra pressure on Indian markets. Crude, if you see currently, it's up around 13%, which is quite unusual in the recent past. As and when the geopolitical escalations that escalates, the crude is going to give some tremors for the markets like India. But if I observe the charts and the details of the crude is concerned, crude oil is in a long-term bear market, which is a good news for the emerging markets like India, especially. But whenever these kind of geopolitical escalation that tend to escalate, it gives the wings to crude to fly. But we need to closely observe the crude oil prices next few days. If the crude is moving above $80 per barrel, that can create some kind of extra pressure on Indian markets, because one hand we are celebrating the low level of inflation recently, and RBI have taken very good measures, and they've given a bazooka and they've given a booster to the Indian markets, which is reducing the key interest rate parameters. But if the crude oil is going to escalate, that's going to create some kind of pressure on inflation, and even the monetary policy stance, which is accommodative, that can change in the next coming quarters. So crude is essential, and also fundamentally speaking, the domestic factor one need to track being the monsoon, which was, we had an early monsoon, but the progress of monsoon also extremely crucial. If any kind of delay or any kind of aberrations in the monsoon, that are also can create the pressure on Indian markets. By and large, the domestic markets are concerned at this point of time. We need to closely observe the crude oil movement and also the progress of monsoon at this point of time. Geopolitical worries, of course, it is beyond our control. We need to see how things are going to escalate in the next couple of weeks. That is extremely crucial. By and large, the domestic setup of the market, Indian market is definitely it is a warranted by on any declines. That's what we witnessed in the past couple of years. Whenever there is a sharp decline on the Indian market because of any kind of these geopolitical escalations, those who bought at the paramount point of uh, of uh, 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 of worries, whenever there is a fear in the worries, okay, definitely investors made good money when these escalations become normal over a period of time. It can take a couple of weeks or a couple of months also, but any decline on Indian market can be a very good opportunity. Whenever there is a extreme pessimism in the market, okay, that is the time one can do the cherry picking for medium to long term.
Okay, okay. Kranthi, if any sustained rise in the crude oil prices, it could spoil the inflation math for India also. And now that we're seeing the early onset of monsoon, but the monsoon so far has been quite patchy. How much of an inflation impact are you seeing going ahead into this fiscal year? Because earlier we did see RBI reducing its FY26 inflation forecasts.
Yeah, definitely, Lovisha. These are the key important things which are going to have a major impact on the monetary policy and also on the inflation as a whole, which is in favor in the past coming weeks and months of the financial year is concerned. But slowly, if there is any, it is premature to say at this point of time because these are the early signs at this point of time. As you mentioned rightly, the monsoon has been patchy. We need to see a couple of weeks to get the assessment at this point of time. It's completely premature in terms of the crude is concerned. Also, at the same point of time, the progress of monsoon also. Definitely, it's going to have any derailment in the monsoon as well as any escalation of crude oil prices to further. Okay, definitely, it's going to have a impact on Indian market, but it is premature to determine the impact at this point of time. We need to see a couple of weeks whether the crude can sustain at this range or we can see some kind of a correction in the crude oil. We need to observe, and the monsoon also we need to take into cognizance after a couple of weeks later. At this point of time, one need to be a little bit cautious. These are the worrying factors which have been comfortable or in favor of Indian markets can turn as a negative side at this point of time. That's what we need to keep on our watch list at this point of time.
Okay. Kranthi, 12% jump for the crude oil price. It's quite significant now that Israel has attacked Iran. A retaliation could be expected. What are the markets pricing in at this point of time? Do we expect a retaliation and the markets, have they priced in that risk premium at this point of time, or what are we anticipating?
Any kind of further escalation that is going to create some extra pressure on Indian markets, okay? Last time, 18 months back, when there was a geopolitical tensions between Israel and the Gaza, the entire issues, we witnessed the same kind of uptick in the crude oil prices. In fact, crude oil prices rallied around $90 to $100 per barrel, which created some kind of extra pressure on Indian markets. But market has been resilient that point of time. But this time it is a complete escalation with Iran, which have a prominence with respect to the crude oil prices and crude oil markets are concerned, crude oil production is concerned. Of course, India has been buying crude from the Israel in the past, and India has a good relationship with Israel, and we are making the payments to Israel in rupee terms, and the trade has been quite bilaterally quite strong between both the nations. So any kind of further escalation, it's going to have a domino effect on Indian markets, but it is completely premature to say how the things, because geopolitical escalations are completely out of the control. If we are expecting one thing, something the other way it's coming. So it is completely premature. It is the preliminary stage of these escalations. If they further escalate, definitely it's going to have some kind of a negative sentiment on Indian market in the medium to short term.
Okay, okay. How do you believe, investors should position themselves when it comes to crude sensitive plays? How do you expect that this decline is expected to, how can they play this decline at this point of time?
In terms of the oil marketing companies are concerned, which have been rallying in the recent past, in the Q1 of the year, they're going to face some kind of extra pressure. The remaining other paints and the other industrials are going to have some kind of a margin impact in the medium to short term. But how this crude oil entire saga is going to play out in the next couple of weeks, this is extremely crucial. One need to keep on their radar at this point of time. But by and large, the domestic consumption and the banking and financial services, the domestic centric sectors are concerned, they're quite favorable. If there is any dip in these stocks, and we have been quite bullish on your channel from quite a long time. We have been bullish on defense stocks, and the way defense stocks have rallied in the first quarter of the financial year, they are phenomenal. Any significant dip, if the market is witnessing with respect to defense stocks are concerned, they're completely domestic centric at this point of time. There is a clear cut order book visibility and earning visibility, but they have rallied very sharply in the recent past, and also they are at a fairly valued zone at this point of time on a longer term perspective. Any significant correction because of these kind of knee-jerk reactions, that can be one of the sector for the investors to cherry pick the stocks for a medium to longer term. Infrastructure and engineering also looks attractive for a medium to longer term perspective.
Okay, okay. Kranthi, now that the US-China trade deal is also out and the trade fears, war fears have also been a little easing on the tariff front, do you expect the flows to get diverted away from India and towards China?
For the long only funds are concerned, Lovisha, the emerging markets and the investors, the global investors' favorite destination is India till now. Okay, they're quite positive, but in the medium to short term is concerned, some kind of hot money can go to China, but there is some kind of a ambiguity for the investors with respect to the policy obscurity, policy transparency is concerned. But for the investors who are looking for the long only, for the long term, definitely India can attract the funds going ahead also. What we witnessed in the past 45 trading session, some kind of a strong buying that has came from the foreign portfolio investors. The narrative has been changing quite strongly. 3-4 months back, a quarter back, the US was the favorite destination for the investors across the globe, and there was a narration which went for short term. Let's sell emerging markets and buy China, and the narrative again quickly changed. Now the narrative a few days back was let's focus on the Indian markets. Okay, that's what the narrative. So there is a change of narrative in the medium to short term, but the long term narrative has been Indian markets, despite of the valuations concern some point of time whenever the market rises around 25,600, 700 levels of Nifty, some kind of ambiguity do come for the foreign investors in the medium to short term. But in terms of the long-term averages and policy continuity, what we are witnessing, and also the policy transparency and the way the growth has been taking place, the domestic consumption and growth is concerned, Indian markets remains the favorite for the foreign portfolio investors who are looking for long-term opportunities in India.
Okay, all right. Just one last question before we let you go, Kranthi. At this point of time, which sectors are you looking at in this decline? Anything that you are liking from this space, and of course, anything that you recommend investors to remain on the sidelines for the time being?
With respect to the Indian markets are concerned, Lovisha, any decline on Indian market, definitely it's a good opportunity for the investors. So banking and financial sector looks very attractive to me for a longer term perspective. IT valuations, with respect to the long term averages, if the investors have a longer term horizon, once the obscurity with respect to the US trade tariff and US budgets are concerned, once we get the clarity, okay, we can see some kind of a heightened activity in IT stocks for a medium to longer term. And the engineering and construction, real estate, domestic consumption looks very attractive to me on a medium to longer term perspective in the near term. Definitely, one thing is if the decline on Indian market further accentuates, one need to have a staggered approach, and one can buy at every decline.
All right, all right. With that, we have to let you go, Kranthi. Thank you so much for your time, and we hope that we connect with you soon.
Thank you, Lovisha. Always my pleasure to share my views with you.
All right. All right, let's take a quick check of the markets at this point of time. Well, Sensex is down about 900 points where we started off. It has seen a little bit of an ease. However, still trading with a cut of about 1% or so. Nifty once again below that 250 points, and of course below that 24,650 mark. If you look at the advanced decline ratio, definitely declines have taken an upper hand. India VIX up about 9%, and all of the sectoral indices are in the negative territory. But we are hoping that, towards the second half, we could see some recovery and we're off the day's lows. But until then, we'll watch out for all of the stocks in specific and all of them in today's trading session. But with that, we've come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30 for closing, and we will be discussing about how the market is developed and what the stocks were in focus. Until then, signing off.